Welcome to part 11 of this futures trading accelerator program. So in today's video, I'm just going to be discussing how to read candlesticks. So candlesticks is basically how we as traders read and see the chart, right? These are candlesticks, right? All of these are candlesticks. You might also have seen, like the little line chart, and that works too, but 99% of traders just use candlesticks. So let's talk about how to read them. So basically, as you saw, you have green and red candlesticks, and let's just say this is a green candlestick, this is where price right here would have opened. Price would have come down a little bit. That was the low. Then price, you don't exactly know where price went in this candlestick, but it might have opened here or opened here, went above here, then came down here, then went up here. You don't exactly 100% know, but if you're watching it live, it doesn't really matter. And so, price comes down here, then just goes up, and that's where it closed. So here, right here, that would be the high. So that is the highest price that, the futures contract got during this period. So opened here, went to the low, traded up here, and then closed right there. So closed right there, and that's basically it. And obviously it would all be vice versa if it was a red candlestick. So price would have opened right here, would have had the high right there, high, open, and then this would have been the low, and that right there, right here, would have been where it closed. Now, if you look at the chart, let's go to ES this morning. So if you look at the chart, there's a lot of different types of candlesticks, right? They don't all look like this one right here with wicks on both ends. Some of them look like this with super long wicks. Some of them look like this with barely any wicks. So let's basically just go through some of these candlesticks and talk about, just what it actually is telling you. And that's the thing about candlesticks, is that basically they paint the picture of who was more aggressive in this 2-minute time period. So 9:30, price opened at around 43.95. Shot all the way up to 44.02, and then went all the way back down and closed about 1 point higher at 43.96.5. So what does this tell me right here? This says that bulls had, control basically in, the first little bit of market open, but then bears came in and totally took price back down, slamming the bid and just absorbing all the bullish pressure and pushed price all the way back down. Now, price opens up again. Price goes all the way up to 4,400, rejects a little bit off, about 1.5 points, closes. Price opens again, 43.98, maybe goes a little bit down. Bulls take it back up, closes. Price opens right here. Price goes all the way back down, taking out a lot of stop losses. And then bulls defend, 43.95, push price all the way back up. Then price comes right here, trades a little bit down. Bulls push price all the way up to 44.05. Bears defend 44.05. Price closes. Opens right here. Bulls try to break out. They do. Rejects off of 44.07.5. Bears push price all the way back down. So if you're kind of understanding now how the market works with candlesticks, and how these, the long wicks that you see, green and red, basically say that bears were in control, bulls were in control, bears were in control. Basically, if the wick is on the bottom, that's bullish, and if the wick is on the top, that's more bearish. Now, obviously, you'll have some that are like this, where, the wick is on the bottom, and that's actually pretty much the longest wick out of here, right? So price opened, bears pushed it all the way back down, bulls pushed it up. Now, granted, this was news, so that's why it does kind of look a little bit wonky. But then, bears just kept taking it down and taking it down and taking it down. So, so not always will a long wick on a candlestick be the best indication of, who's in control. You will have to be looking at the charts and building up your market intuition and just kind of tell, what's been going on recently. Now, obviously, if we look right here, this is a live example. Yeah, I mean, large red candles, price trading at 43.70, bulls trying to start to push it back up, and then boom, large red candles again, bears push it back down. This is exactly right here, and especially if there's not a lot of sideways movement, when there's large red candles on high volume and price is being pushed down, that is a perfect indication of a large sell-off. And now also, I did forget to mention that let's see if we can wait here for a little while until the next candle will open at 11:10. And boom, right? So you see how it opens, right? So it opened right here. Now, you'll see that it's green right now, but there is a chance that if it breaks below whatever this opening price was, basically 43.67, it'll turn red. Let's see if we get that anywhere here, just so I can show you guys this example. So that's the thing, is that you always have to be waiting till the candle closes, because it'll look like it could be bullish, but then it also now could come all the way down here, and then this little right here would turn into a wick, and then it would be like a body down here. And so, it might look bullish right now, but if price just turns around, then that might start looking bearish. So that is one thing that I did forget to mention, is that you always have to be careful entering and looking at possible trades when, a candle is forming, because candles can look great, they can look phenomenal in certain scenarios, but you already see right here, right? Boom, bears are taking control right now. That looked bullish. We were breaking above 43.70. Maybe you're gonna start squeezing out some of the shorts, and maybe trade at 43.80 or something. But it's not looking the best right now. It's struggling to even stay above that opening price that it just had. Now it just flipped red, right? Now it just flipped red. It doesn't look that good. I don't really see any bullish indicators now. Now it just rejected off 43.70. So I hope that you guys are kind of now getting the hang of how to read these. Now, yes, it will take just a little while, maybe a couple days or a week, to fully understand. And especially, I want your homework to be to just literally just watch the charts. Yes, it will be very, very boring, but just watch the charts, see how stuff moves, see how a large move develops, and just watch the price action, because you'll start getting that market intuition going, and that'll help you extremely when you're just starting out, and just help you, gauge the market a little bit better. So I think this is pretty much all I'm going to be going over about candlesticks. If you do have any questions, again, either comment below or just DM me on Instagram, and I'll be more than happy to, just discuss a little bit more, just any of your questions, anything they might have about candlesticks. And again, I do want your guys' homework to be to just watch the charts. And if you need to, just, look up how to read candlesticks online, and, look at some of the anatomy of them, basically like how I drew. It's all the same. But, if you need that extra little bit, just feel free to do that. And once again, thank you for watching this video, and see you guys in the next one. Peace.